All right, guys, welcome back to the Canadian Real Estate Homefront Podcast. We're joined here with Carmen Campanero. She has many hats in real estate. I'll probably pass it along to her to tell you what she actually does, but we're really excited to have you on today. Thanks so much for coming.
Thank you for having me.
Yeah, introduce yourself. Let our audience know who you are.
Okay, Carmen Campanero. Been in the business for 25 years, real estate business. Actually, I started when I was 18. Bought my first house at 18 and then flipped it just before the 90's crash and made $100,000. And that's what really started me in this whole industry. It gave me the bug in a big way.
Yep.
I actually own a mortgage brokerage in Burlington, Ontario, Canada. We've been in the mortgage business for 20 years. And I'm heavily involved in real estate. I love it. I have a serious addiction to real estate. And
I would agree with that. I've had the pleasure of working with you in so many different areas, even your own personal houses down to the construction, the high-rise buildings that one of your companies is working on.
Yes. So we have, I forgot to turn off my phone.
That's okay.
But we've developed over the years. So Profunds Mortgages caters to real estate investors primarily. When I got into the business, that's actually how it happened. Real estate investors just it landed in my lap. I was put an ad. I was working in the basement of my house. I had my little ones running around, and I put an ad in the Hamilton Spectator, and I got a response. I was like so excited. And anyway, so the guy gave me the worst deal ever. It was a deal in Hamilton on John Street, but back then it was really, really bad. It wasn't redeveloped yet. And it had a restaurant in it, and it was like a mixed use. I got that approved for him after working on it for months, and it was my first deal.
Wow.
And he was so thrilled. He put my name on a board at the events. He worked at an investment training company for a large training company, and he had 150 students a month. So what was happening was all these people started calling me.
Wow.
And I went, holy crap. So this was like, it just kind of landed in my lap, and then I built it from there. And so we did a lot of private lending. We got into actual real estate developments and holdings and construction and a REIT. And we started to build the empire that way.
Very cool.
Empire is a good word because you have so many different pillars to your business. What do you feel is the strongest or the busiest right now?
Well, if you would have asked me that 3 years ago, I would have said it was the construction side of the business.
Okay.
And that's why having pillars is very important.
Yes.
And now it's more about the REIT. And so we have a REIT called District Property Trust. And District REIT is a diversified REIT. So basically we buy commercial, industrial. We also lend money. So we do private mortgages in the REIT. Yes.
Okay, so just to back up to people that don't know what a REIT is, it's a real estate investment trust. So a certain amount of people buy into this REIT, where then capital is then used to acquire properties, including the commercial and
exactly.
Yeah, and then so essentially your money is expected to grow at a certain percent if you put your money into the REIT. It's like an alternative investment to the standard investments that we talk about all the time.
Yeah. So instead of being an active investor where you're out buying houses or buildings and managing them and having to qualify for the mortgages, you invest and you buy a unit in this REIT. You can, minimum is 10,000, or you can invest as much as you like. It's registered fund eligible as well, so you can use your RSPs, TFSAs, all of that, RESPs, and you can buy into the REIT and you get cash flow returns and also the appreciation and growth that the buildings are achieving.
Right.
So we own the real estate together as a pool. And
I think more of these will happen, sorry to cut you off, because of even where like crypto and things are going, like the whole tokenization part of the world and how things are becoming more that way. I think more people are going to own properties jointly using
fractional
the
ownership.
Fractional ownership. I think they're going to be, because right now you don't hear of a lot of REITs. Like you study it when you're learning to become a real estate agent, and then you never hear about it again. But the fact that you can put money into something that gives you cash flow and you get appreciation. Usually it's either private lending where there's no appreciation or real estate where you can maybe get both. So this is kind of the best of both worlds.
Yeah, it is. It's actually really interesting. So our REIT, it's called District, and it's, like I said, diversified primarily in Ontario, in Canada. It's actually in the process of acquiring a couple of buildings right now out east, but primarily Ontario and multifamily, industrial, and because we've got, myself and my partner, we've got so much experience in the real estate world, and my passion is that we said, well, you know, how do we create something so we can keep all of these projects and all these properties we're building?
Right.
And we said, let's do a REIT, and then our investors can benefit as well. So we created District, and it distributes 8% annually, and it's paid monthly.
Okay.
So it's,
that's high.
It is high because most REITs are, you know, under 6, especially in this.
How do you guarantee that? Like, let's say that, you know, part of what the acquisition is for that year is a commercial or whatever it is. Obviously, there'll be long-term appreciation, but let's say the market isn't good, and it isn't right now. So to continuously give 8% per year is a hard thing to.
Oh yeah.
To
so
do.
it's specifically now in the last, I'd say, 12 months has been probably the worst market I've seen in the history of my being in the business.
Wow, that's
Says something.
It's really bad.
Yeah.
Okay, like I'm talking bad.
Expand on why. Why is it so bad?
This is juicy because you've been in it for 25 years.
Oh yeah,
way
so
longer than us.
Well, I'd say, you know, you had the 1990 crash.
Yeah, talk about that because, sorry to interrupt you, but you said you sold your house in the 90s before the crash.
Yes.
And the 90s, I was born in the 90s, so I don't want to speak. But when I studied it, it traded sideways very much so. Like it took you a long time if you bought a house at X to get back to even at some point.
Yes.
Do you see similarities between that market then and today?
Well, I will say, and I just straight up, I wasn't really that active. I was 18, and it was the first one I bought. And
where was it?
And it was in Burlington, Ontario. Okay. So it was a single family home, and I opened up a business. I inherited some money, a little bit of money, not a lot of money.
Donald Trump style?
Yeah.
$1 million?
No, that was like $80,000. Okay. And so what I did is I said, I got to open a business. So I opened up a video business.
Oh, I love that.
Called My Video Store. And
that's so funny.
And it was the coolest video store. Anyway, and I bought this house. And the house, just before the market crashed, and it wasn't intentional because I knew nothing about it. I just sold it. And we cashed out 100,000. Yeah. And back then it was quite a bit.
100,000 back then was like $1 million today.
A lot of money, Mama.
Yeah.
So I was like, woo, this is what gave me that.
Right.
Look, I got to do this. And so I ended up buying a duplex in Hamilton with the money, which was my biggest mistake because I ended up losing money on that one.
Interesting.
But I house hacked, that's what they call it today, but I lived in the main level and rented the upstairs. But I'm going to go back to this issue with the market right now. So in the 90s, I guess interest rates went tremendously high. Like they went so high. And I remember when I bought my first house and I was having my kids and things like that, the interest rate was like 11%, 12%. And that was normal. And then it went down to 7%. I went, wow, look at the rates are so great. I'm thinking, holy crap, we've been so spoiled all this time, like seriously spoiled with the interest rates. Right. But now this is different, and it's 2008. I'll talk about that because I actually went through that. You know, it was for Canada, it was a blip, right? Like in Canada, I remember in September we were working on a project, we had funding in place, and then all of a sudden. The lender pulled back and said they're not lending anymore. People started, putting their money aside and not wanting to invest it anymore. But in March and April, I don't know what happened, but it went back. It started back, and it wasn't anything like the United States.
Right, because we talk about the 2008 housing financial crisis, but it was the States, really.
It was more the States because their banking system failed, but we don't have a lot of banks, and our banking system's pretty strong, and that never failed. Yeah,
it didn't. And,
it didn't fail.
We were so conservative. Canadians are conservative.
Yeah.
And
well, not today, but
yeah.
we once were.
Yeah, right. But compared to the people in the States, I think we're known as conservative. Yeah. Right.
Yeah.
And not politically conservative.
Yeah.
Yeah. That's a whole nother topic.
Yeah. That's so funny. Hilarious. So that was 2008. And now, so I guess this would be the third time then that you've experienced the market being like this, but this would trump those two as being the worst.
And I think because I'm in it a lot more significantly, like I feel the impact of it. And it's basically what has happened is, well, first of all, the interest rates went up so high in 2 years from our lovely Prime Minister and the Finance Minister that it, created a shock for everybody. But what's happened is a lot of the big money is not in the country right now. People are taking their money out of the country. People are taking their money to the States, or they're going to, moving to Dubai, or they're, India. A lot of money's going into India right now. So a lot of the Canadian money, like being in the finance business, so we've graduated from doing residential mortgages to working on commercial and, getting CMHC mortgages and construction financing and development financing, land financing, which is almost impossible right now.
Yeah, if you buy land, it's very tough to get somebody to loan you money or mortgage it.
Banks won't do it.
No, banks won't do it.
Banks won't do it, period. But there's a sector in the industry, in the mortgage industry, where they lend specifically to these types of projects. And, there's, a dozen of them out there that are kind of like a B lender, we call it, that have bigger money. It's like a MIC or something like that.
It's so good to even know this too, because I've always loved the idea, and I know one person that's doing this, that they bought land and mortgaged it, and then they've gone to another lender who is giving them a construction loan to build their own house. So instead, and so it's the similar, right? They're building the house for $1 million instead of buying a house for $1 million and mortgaging it. They're mortgaging the cost of building it monthly, and yes, it'll take a while, but then you get the house as exactly how you want it, the location you want. And I almost wish that, you see that more, because
it's hard.
It is hard. It's hard
to get that money.
Yeah.
And today, I mean, banks do that though. Yeah. And there are credit unions that do residential type of financing like that. So that is still obtainable today. Specifically more so with credit unions, if you have land and you want to build your own home, that kind of thing. Yeah. And private lenders still do it, and we're able to still secure money like that today.
Okay.
But it's only because we've been around for a long time, and we have
the
lot of
credibility,
investors in the industry.
So go back to the point where you're talking about money is getting taken out of Canada and people are looking elsewhere. Why does that hurt your business so much?
Well, it's liquidity. And, I'm being totally frank. I'm not.
Yeah,
no
please
beer
do.
Skittles. I'm not hiding anything.
No,
it is what it is. It's made it very challenging. And, for people that are in the construction and development business in our industry today, they're really struggling. Like, it is probably the worst. Any of us, it's survive till 25. That's the saying that so many people are saying.
Is that because there's going to be a change in power in 2025? Is that the idea?
I think that's it. Also, the interest rates, this was early 24, because that's when it started happening, really feeling it, the pinch, because people weren't lending. People weren't paying out their mortgages. So the money wasn't rotating in the system. So many lenders are stuck in mortgages these days. And on the larger scale too, like with land and development and things like that, the money is stuck. They can't get it out because they can't pay it out. And in the first time for a very, very long time or ever, lenders of that magnitude are having to work with the developers and the builders to build it out and have a solution to the problem, not just forcing receivership or power of sales or any of that, because now they're saying, okay, well, shit, we sell it, we're not going to get it back.
Right. So if the project, let's say, was, underway being built, and then as the interest rates got hiked up, all of a sudden it becomes too expensive to continue, but you can't sell it halfway done. The lenders are like, we need to see it through. Otherwise,
even selling it today, though, because there's so many projects that went down, and big companies that you would never think.
Yeah, huge companies.
Right? That have really suffered. Everybody's suffering.
Yeah.
Like, I know one of the biggest funds in Canada, It's a $4 billion fund, had to hold on redemptions and distributions right now. Put a hold on that. What impact does that have on all the people that have invested in there? So it's a whole domino effect.
Right.
Or the people who are supposed to be building the project, taking the paycheck home, paying the income tax on it, feeding their family.
Construction.
It all
Is that a
trickles
hoax?
down. Yeah.
Unless you're in purpose-built rental,
Yes.
Right?
Yes.
Mm-hmm.
Yeah.
which is
So
a good segue to
it is a
what else we're doing here. So
right.
But yeah, it is a really, really crummy situation right now. Even with our projects, we've got so many on hold that we can't do anything with.
Is it because you're waiting for the lending to start the construction?
No,
Like where's the stall point?
well, when it comes to pre-sale construction, and you know
Yeah.
very well because you work with us on projects,
Yeah.
on residential stuff,
Yeah.
that you're not getting the sales today. Like they're
Right.
not selling.
So if we don't get enough pre-sales, like pre-construction sales, it used to be the big, huge buzzword pre-construction. Now I think a lot of people are scared of it just because of what's happened in today.
So Carmen, if the municipalities and the cities dropped the fees, because 30% is taxes, would that allow you to start putting shovels in the ground? Have municipalities come too dependent on the end consumer paying for their issues? Am I right with that?
You're right on the nose there. And if anything, they haven't reduced anything.
They've increased.
doubled development charges.
So the people who are saying we're going to give you affordable housing are really addicted to this tax money, and they're not creating affordable housing because
They're not creating affordable housing.
It's a lie.
They've increased development charges, doubled it. So how on earth does any builder or developer seriously proceed on a project with the cost of the land, the cost of the financing,
Carrying it,
and then on top of it, the biggest hit is the DC charges and the stuff that the government gets. Now, on purpose-built rentals, there are some incentives. Mind you, the DCs are still there, but they are possibly deferred depending on where you are and what city you're in. But they've removed the HST from construction and development on purpose-built rental projects.
which is 13%.
Yes.
Which is a big, out of
That's
the
a
30,
big when we're
nut
talking
if
out of
you're
the
those
30
numbers.
points that
20, 30,
yeah.
40, 100 million, right? Then it's significant enough. But the construction costs, like even though the inflation went bananas after COVID, it still hasn't come down to the point where it makes any significant difference. Actually, it hasn't.
Yeah.
The costs are still up.
So in terms of getting these projects off the ground, I guess there's only two solutions then, is charging more to the end consumer, which
they're saying
some
no.
people may
People
not
are saying, "I
be
can't
willing
afford
to
it."
pay,
Yeah.
right? Or stopping it all together, because if there's no profit margin, there's no sense in doing it, right?
No, you can take a loss.
So did you see what Vaughan did? Vaughan actually are saying they're getting rid of their development fees.
Wow,
So
that's
to
brilliant.
say people like to have people like you come in and build. And I heard Dan Foch talking about this. He's like, I don't understand why these, municipalities or cities aren't just like, okay, what if we take 25%? Because 25% is better than zero, right?
Yeah.
Like what if they work with the developer and say, okay, we'll slash it 75%, you start building. Because eventually the problem is everywhere, and why Trump got elected is because people are sick of government waste. People are so sick of it. The only thing growing in Canada is the public sector. Like no private sector is growing. And that's why when you look at the unemployment at 6.8%, which is high, it would be way higher if they weren't masking it by
the public sector. Yeah, the jobs grew however much.
So eventually there's got to be some sort of where buyers and sellers meet at some point at the market. Developers and municipalities need to meet, because you guys aren't building. They're not collecting their tax revenue. They're not getting the land transfer tax when it closes, X, Y, and Z. You could go down the list.
You know what? It's going to end up being, very difficult for people to acquire real estate. And that's why it's so important to do it today. Today's a great time to buy. I don't care what the rates are. I mean, if anyone's in a position to acquire, I would grab anything you can, and take advantage of this time.
Right.
Because as you were saying earlier about fractional ownership in real estate or REITs, that's the way. It's power in numbers, and that's how we're going to be able to curve this whole situation. And so that's why a REIT is a good investment, and it's lower risk. You've got a lot of people in on it together. You don't have to worry about getting a mortgage or qualifying for a mortgage or taking care of all these tenants and problems that we have with tenants. So it's good for an investor. And I think that's probably a good way to get in and have ownership.
I think so too. And like, you guys don't kick people out of your properties. Like, and obviously if they don't pay, you can take them somewhere, but like all these purpose-built rentals, like when you have the mom and pop investor and 3 years goes by and the tenant's been there for 3 years paying and the mom and pop goes, well, now I want to sell. Like, you guys don't sell individual units away. So like, that's why I actually think the purpose-built rentals on stuff like condos are actually really good. It brings more supply in and they treat you really well. Like, I live in a purpose-built rental right now myself. They treat you great. You need something fixed, they come and do it. They offer you, like, if you've been a good tenant, like I've heard many of times, they offer you a free month of rent. If you sign on again, like it's great. It's really good for the end consumer.
Topic is about rental income today and how this market has impacted rental revenue. It's gone down.
Oh, it's gone down a ton.
Like what the
like
heck?
a significant amount. My houses get way less. I just had to re-rent all three actually, and I'm short like $1,800 between the three of them from what I'm used to getting the last 2 years.
It doesn't even make sense. We have a housing crisis.
I know. I know. I don't know where everybody is.
So for the first time, you're seeing actually people leaving is what we're seeing on. And when you look at the curve, you're seeing the non-permanent residents like willingly gone, like just saying Canada's too expensive. The opportunity's not here. That's it. So when you crush that demand side or whatever you want to call it, then the supply side starts to fizzle to the surface, and then you have more of a cheaper rental market.
Well, and then on top of it, you have a prime minister that totally futzed up our whole country. So
it's interesting. Like if I'm a liberal and I'm in that cabinet, like the easiest thing you can do to gain more seats is to just have a new face at the helm.
I know.
It's so easy.
Astronomical to me that he's not stepping down and giving somebody else, power to continue the Liberal Party and keep their seats and keep their power.
It's good. Like because
he's going to lose it for everybody. He's
crushing that party.
I know.
Like the NDP is ahead of them, Bloc Québécois is ahead of them, and the Conservative. It's not even like a close battle. Like the delusion that like Mark Miller, as an example, the immigration minister, has saying like, no, like Trudeau can defeat Pierre. Like he's the guy to do it. Like we don't want Pierre again. Like it's just like, are you not just like looking at the numbers? Like it's like saying LeBron James is going to lose to like a high school team. Like it's never going to happen. But it's a mess. It's unfortunate.
And our country was so great. And it's so upsetting to see where we're at today.
We were talking last episode about how whoever comes in power, it's likely going to be Pierre, but when that happens, there's going to be pain in a different way because things are going to have to be clawed back. And like it might be better for developers where things actually start, getting built, and there'll be a long-term progression in getting Canada back to where it was or where it should have been. But programs that Justin Trudeau has released, like the $250 credit, the HST, GST holiday, things like that, those are getting cut.
$250 credit. Excuse me. What are you going to buy with a $250 credit? And look at the cost, the impact that has had.
$1.2 billion. Like what?
Yeah.
And $250 puts us $1.2 billion in deficit to do that. So.
Yeah. I'd rather they keep the money and pay the deficit down because it's for young people. It's what we're going to have to be faced with and paying it off in the future. Like $62 billion deficit. So you said it was 40 was the guardrail.
Yeah.
And you increase, like imagine you increased your household spending by 50%. You would be like, you couldn't sleep at night because you'd be so scared. And now like our whole country is facing this issue.
It's unbelievable.
Yeah, and that's where irresponsibility of government and spending. You've seen in Argentina, he's cut every program, cut in the public sector. They had all these, made up programs, in my opinion, that are just not efficient.
So the Liberal Party was always about cushioning the bottom, right? Whereas the States lets the bottom, I guess, have a harder time, like homelessness, drugs and stuff. So, but then it increases crime too. The more desperate you are, the more desperate a city is, the more crime will be because people need to do what they got to do. So it's a lot about cushioning the bottom, but it's funny because it's like a double-edged sword. He's making it seem as though he's helping, the lower class, middle class with these incentives, but really almost putting them more.
I don't even think there is a middle class right now.
Yeah.
Is there?
Yeah, I'm not a liberal person, so I'm conservative. I was praying that Trump was elected, even though he's a bit of a wild card.
Yeah.
But he's a businessman and he's going to, save the country. And
I agree. Yeah.
And it's a ripple effect into Canada.
For
so
sure.
If they're strong, we're strong. And I was happy. And you know what? I'm saying this publicly, but you know what? I don't care. It is terrible what has happened to our country.
Yeah.
And
I don't think it should be terrible. I think you should be able to speak your mind. So
no,
we appreciate it. Yeah.
There you go.
And I think you should read between the lines. A lot of people, because Trump's coming out. Canada's the 51st state. He's calling the Trudeau governor. It's because he knows.
That was funny.
I think it's funny too, but he knows how valuable Canada is in terms of resources.
Yes.
And he knows we're weak right now. And he knows that we're not taking advantage of being energy independent.
Another ridiculous comment.
That's what he wants. And that's what he sees the wealth that can be here. So he's like, I'll take Canada in a heartbeat.
Do you want to become U.S.?
If Pierre gets in, no. I don't think we need to be, but right now and today, like if you said we have more Trudeau coming and like that's the way the plan forward, I'd say I would want to join the US and be run by Trump. Yeah, that's what I would say. Yeah.
I don't like that. Like there's certain parts of America that I don't agree with, like their gun laws. I don't like those. I'd rather be in no gun country. Their healthcare, I don't love that. Like there's certain things in America.
But their healthcare is so much better. You know what? I go to the States to get a procedure or something.
Yeah, that's
it is
that's
better.
The crazy part.
Actually, you know what? You're very right about that.
Like here, it's terrible. You wait 10 hours to get into a doctor.
I wish that Canada had more specialized people that you could pay for if you didn't want to.
You had like a two-tier.
You don't have that, but you have it down there.
Yeah.
You can pay to get
it. You are right. And
you can pay. You can go pay to get an MRI in a day or two.
Yeah. We talked a lot about at Sick Kids Hospital. My mom works, and there's a lot of top surgeons that left Toronto to go work in Texas because their salary doubled and was paid out in USD. So we're losing that talent and that skill in Canada. So not only is money leaving, like we were talking about, but also skilled people that can be paid double in another country where it's warmer too.
They call it the brain drain.
So we're losing all the top skilled people and, the investors that are used to cycling their money through our economy. So it's a problem because then we're left with all the misfit toys of Canada,
But we're going to fix it. We're going to be back. Yeah. Canada's way too...
I like it.
You know what? Canada's way too good to be just, we're in this situation now and it's really crummy and...
We're a joke.
You know what? We're a joke. We're laughed at. Guess what? We're going to step back up and it's this generation, your generation that's, going to pave the way, and the kids that are growing, let's say the young ones right now today, they're going to see something different. They're going to experience something different. We're going to build it back and be stronger. Yep. That's my gut. I love Canada. I grew up here. I love the States because it's very business friendly and the dollar is great, and our dollar is terrible right now, but we'll be back.
Yeah.
And there's a lot of money to be made here in real estate.
Right. Yeah.
And there's going to be a demand, and people love Canada because it's so safe.
Yeah.
Right? It's always known as that. So
it's still among the top however many of places to live because of the feeling, I guess, of it's safe, it's, things are expensive, but it's still your quality of life.
Yes.
It's still among the top rated countries of the world.
Yes.
Even though we're
still going the wrong direction, but hopefully we can get that back. But I know we will. It's just
get rid of Trudeau. And
we tried his policies, and let's just be honest, they don't work. And I'm not saying that's every liberal policy, but his policies, they don't work. They clearly don't. Spending money you don't have doesn't work. Being easy on crime is not a good thing. You see these repeat offenders and it's a waste of tax money. You see the Toronto Police Department calling out Trudeau all the time.
He's not a prime minister.
He's a drama teacher.
You know what? He served for 9 years. He had his term.
I think he got in because he legalized marijuana.
You know what?
That's
the thing was that with Harper, he was just quiet and
he was great.
But Trudeau is really good at campaigning. But now that everyone's seen what he's really done to the country, he's never getting back in ever again. So I don't know who's next. And when his own finance minister left him, if that's not a telltale sign of who he truly is, I don't know what else could be.
Yeah, that was a joke. But anyway, we will get out of it.
We'll get out of it.
And you know what? The interest rates are coming down.
Yeah. Let's talk about the path forward for real estate.
Path forward, positive.
And what would you invest in now if you're we talked about the REIT. So if somebody is looking, okay, I can't buy a a house right now, but I want to get my money kind of invested in something. Where would you start out?
Right. So, I mean, it depends on that person. You know, are you sorry.
That's okay.
Don't worry about it.
Okay.
You
live.
are a young, driven person, and you feel like, you know, you can get in there and be an active investor. I would say definitely look into deals. I think there's lots of deals to be had now. But if you're, you know, not necessarily interested, you're a career person, you're busy, you've got excess capital, you know, things like a REIT is a great investment. Mortgage investments are a great investment. And me speaking on the real estate side, I know it very well. As long as you're in a good place and you know your exit,
Right.
then I think those are really great places to be. With our company, our development company, we're focused in on purpose-built rental.
Right.
So many developers and builders today are having to pivot into that direction.
Yep.
We're already there. We've been there for a long, long time, and we have it down to a fine art. So our properties we build are really unique and different. They're not the same because I like to put a creative spin on it.
Yes, I knew you do.
And so that's interesting. So what we do is that. So we also have opportunities in the equity position of those. So if you're in an equity deal, which means you're an investor that comes in, puts in some money into a project that's a development project, make sure it's something that you know you're not going to be stuck like condos. Pre-sales is tough right now.
Yeah, that's a hard one.
But here with purpose-built rental, we know that there's exits ahead because there's a demand for that, right? So purpose-built rentals is a good place to be, and that then can be sold to a REIT
Right.
or real estate investors because people love income property.
Right.
Yeah.
Income property is a good place to be.
And I like that you don't need a huge, like you go buy a house, you need $200K down payment. Like with these things, you can start
$10,000,
building
you can
your
get your feet
money,
wet.
right,
Yeah.
in smaller little increments, and it helps diversify your portfolio too.
Yeah,
and
so
just
even
having,
for what we did is now we launched a gift certificate thing for the REIT. So you can buy a gift certificate at only $500. So instead of buying Christmas presents for the grandkids or children or whatever, family members, you create wealth by
Oh, that's cute. I like
buying
that.
little gift certificates, and they start to build their little
I
portfolio.
love that. So let's play that out then. So if they received a $500 gift certificate to be a part of this district REIT, that would then pay them what's 8%, like
on that.
Yeah.
But you can just do something. So in a REIT, in our REIT specific, you can roll your returns into more units.
Yep.
So the REIT has been, based on a DRIP, has been yielding about 15.5% over the last 5 years.
Oh, that's really cool.
Return.
So you don't have to take the money. You can say just keep it.
DRIP it. Yeah. So if you have registered funds.
It's like a dividend.
Yeah.
Yeah,
You
okay.
just, and though if you are receiving the cash, if you're invested and you're receiving the cash flow, it's tax deferred because it's considered return of your original capital that you put in.
Okay.
So it's a way that you don't have to pay tax on that
Right.
immediately. And then when you sell your unit, it is a capital gain. It's not considered income.
right.
So it's tax different.
Like at half almost, pretty much, right? Yeah, yeah.
So it works out a lot more. It works out more favorably, or you can just keep building your
Right. And who's managing the REIT? Like who makes the decisions on what becomes acquired?
Yeah. So there's a board of directors,
I was going to say, yeah.
and it's highly regulated. You've got so the decision making is right now. I'm a trustee, and my partner's a trustee, and then we have a board. But we manage it. We do a lot of the operational stuff, and we're heavily invested in it as well.
Okay. That's a good
So-
sign.
Yes.
Yeah, you got skin in the game.
We got lots of skin in that game, and we've been, you know what, the goal is to build it to a couple $1 billion and then maybe take it public.
Yeah.
That'd be really
like
cool.
that.
Yeah.
Yeah, and
Don't forget about us when you do that.
Yeah.
Just
So
kidding.
building it would be acquiring property right now is essentially the building stage before you took it public, and taking it public would be like the stock exchange.
Yes,
essentially.
that's right.
Take
Yeah.
on the TS. So
Yes.
if someone wants to invest through their TFSA now, how does that happen?
Well, there are only a couple of self-directed plan holders that can actually allow for self-directed money through your registered fund. So there's Olympia Trust, and then there's Canadian Western Bank.
Okay.
So the funds have to be in there, but you're not charged or anything you're not taking the money out of your registered funds, you're just moving it. And then once it's in that trust, then you can move the funds into the REIT.
Very
and then you own your units, and then immediately it starts to earn the returns.
Interesting.
And so any of the value creation. So we bought a portfolio in Toronto last year.
Okay, in this REIT. So the REIT owns the portfolio.
The REIT bought it, and the guy was in a bit of a trouble. Like he got caught in the perfect storm where interest rates went up, and he couldn't refinance the buildings, and he had more debt than the value at that time. And it's been a storm for a lot of people, right? This is a scenario a lot of people have suffered through. So we picked it up for about 20 million below market.
Oh, wow. Below market
At that time.
Wow.
Yep. And so just think about this. So then we went in, and the buildings were pretty much vacant and needed renovation work and everything. So we went in and renovated and rented out the units and stabilized the majority of the assets, and then got an MLI CMHC program, which is very favorable. 50-year amortized mortgages with really good rates.
Right.
And today, in a CMHC mortgage, even though the rates were seeming to be high, you're still at a 3.5% interest rate,
right,
with a 50-year amortized mortgage. So it's very good.
Yeah.
For commercial real estate.
Yeah.
So those buildings now are stabilized, and once they get assessed in value, there's going to be a significant lift in value because the value we've created for renovating and refinancing and all of that is going to be benefit the REIT, the investors.
Everybody that's a part of the REIT.
It's very cool.
Wow. It is cool because you put your money in something, and these people are doing all of
the work behind the scenes.
Yeah, work behind the scenes and grow your money for you. That's cool.
Yeah. You're getting rewarded as an investor.
It is a cool strategy too to do things like this. For example, when the interest rates were even higher, buying these properties, let's call it Hamilton or wherever, where maybe the interest rate doesn't allow for cash flow right away. Well, an extra little lump sum into something like a REIT or like private lending will help mitigate the cash flow if you're buying the duplex at a really good purchase price, right? Instead of back in the COVID times, you buy it for $1 million, your interest rate's 2%, you have cash flow. Well, I'd rather buy that same house at $700K, no cash flow, and then put something over here, and even negative cash flow, and then mitigate it, because the 700 to $1 million is way better. Right? So that's like an add-on that sometimes we do. She's
not just beautiful, right? She's smart.
That's so funny. Well, I've had people sometimes even do, like, if we buy something that's a really good purchase price, but there's no cash flow, and they're like, I can't be negative cash flow, I'm tapped out. So, that $500, well, they have a line of credit with the bank. The line of credit costs them 5% to pull, but I'm going to make you 10%, let's call. So now I'm going to mitigate your negative cash flow by using the bank's money and giving you 5% on their money. So now that property is stabilized with those two, and now we're going to see the equity increase over time because we bought it at such a good price.
You got it.
Yeah, so even perfect. Add-ons.
Yep, it's perfect for that. And so I think even giving it to, like, for the gift thing,
I think that's a great idea.
And I thought about it so late in the season. I went, shoot, why didn't we do this earlier? What a great idea, because we did it last year for our grandchildren.
Oh, that's so cute.
And they got a gift certificate.
Your whole lineage is going to be rich.
Yeah.
Well, you have to.
You got it.
It's wealth creation.
You have to.
And you know what? You're giving these kids or other family members the opportunity to create wealth ahead of time, right? So, and you're not just putting money in a bank account.
Right.
You're letting it grow.
Totally.
Can you imagine?
Yeah.
It's a $500 gift certificate today, but what's it going to be worth in
when they're
10 years?
Yeah, it's such a good idea, because a lot of parents put money in bank accounts. Everyone does that, but if it's just sitting in a TD savings account, like, you're losing money. Yeah, well, I'm sorry to say, you are losing money on that savings account. So it's cool to know these alternatives, and obviously, when we talk high level like this, for anybody that's listening, like we'd walk you through how to get started on this and what it actually looks like to own a unit in this REIT or be a part of it, and how that can work for you as either an add-on, and like you said, the initial investment is
only $10,000.
Yeah, it's not much at all.
No,
compared to
fair. And actually now it's $500.
Yeah, I guess if you if you want to buy the gift certificates, I think it's so smart, and it even gets you thinking that way, which I also like, because people are scared to make a move, especially when they don't understand. But even allowing somebody to do $500, which is such a small investment, gets them thinking. And it's like, oh, what is that going to do for, and it kind of changes your world a little bit when you put your toe into the waters that you weren't necessarily aware of before. And
Exactly.
Yeah, it's a snowball effect.
And, even during this period of time that has been so challenging, the REIT has made its distributions nonstop.
Yeah.
And it's able to do that because there's a lot of rental income, but it's not just that. We also do mortgage lending. Not a lot, but there is some lending in there. So the returns are about 12%.
Yeah, I was going to say they're a lot higher. Yeah.
And it brings us the ability. Also, we acquired a portfolio up in Owen Sound area of industrial, and the cash flow on that is really large. So we're diversifying and being creative on where we're buying and how we can make the most money.
Amazing. I think it's smart. So it's you've been doing this for how long then?
The REIT's been established for about 6 years.
Okay.
It has about $260 million in assets right now.
Yeah.
A little bit away from the $2 billion, but not
We'll
that
get there.
too
Not
far
that
away.
too bad.
That happens
What do you need, a
fast.
10x? There you go.
Right?
It does happen. It can happen really quick, all of a sudden.
Yeah,
that's amazing.
Right. So we just, we're building it and organically building it and working it hard, and we want to share in that wealth creation with everybody. So
Yeah.
That's cool.
Wow, I think that's great.
Carmen, we really appreciate you coming on. I thought this was a really good conversation.
Yeah, it was fun.
Where can people find you?
They can reach me at profunds.ca, info@profunds.ca.
That's your email. Okay.
That's my email, or my email is carmen@profunds.ca.
And if they want to see like is there like a website they can check out the fund at if they want to invest in it?
It's districtreit.ca.
I'll put that in the show notes too.
Yeah,
just,
you can
just,
put it in,
we'll
and they
link it
can,
there.
or you can call the 888-330-3866. That's a toll-free line, Canada and U.S.
I love that you have a toll-free number. I
good.
want a toll-free number.
Yeah.
That's so cool.
Yeah, so they
Very
can
good.
call that in, or they can just go to the website. It is an exempt market product, which means that you have to qualify to be able to invest.
Got it.
But we have an exempt market dealer that handles that, and suitability and all of that.
Right.
And my job is to focus on the real estate side of it, which I love.
Yes.
And the EMD handles the suitabilities and the capital side of it.
Right. It's crazy how many things that you do on a day-to-day basis, just how many different little avenues.
It's a good thing I have ADD.
Yeah, I know. Hey, we talk about it all the time. It's a superpower when you're this busy. It's just pulled in every
I'm
direction.
surprised Brooke's not your daughter.
Yeah, I know. It's hilarious.
Many people have said that.
I know.
that's so
It's so funny. Well, I'm even seeing Carmen's phone just like light up, and I'm like, we are the same. Like every single app is giving her notifications. And I'm like, same.
You need that hit.
Like when you stop, you're gonna have that's the same with me.
Well, right now, you know what? This year's been so busy, so busy, and just because we're dealing with so many, there's so much going on out there right now with the market and a lack of capital, and it's been insanely busy for the mortgage side of the business.
Mm-hmm.
So we have that, and then I have the REIT. Then we have our development projects, and then on my spare time, I run Once Upon a Stay and do Airbnb rentals in the States.
Carmen has the most beautiful Airbnb on the lake in Burlington with 200 feet of lakefront. It's decorated in such a vintage and very pretty and cool way. I love that house. So she also taps in the Airbnb market.
Yeah.
That one's special, even for weddings and stuff.
Oh, it's beautiful.
Look at
We have
Carmen's
stuff
house.
up north. But then recently, Florida has been a big direction for me.
Cool.
And so I bought this really cool house, totally derelict house. It was so ugly and gross and dirty, and it was a divorced situation. But it's this beautiful house sitting on 6 acres of land, and it was an old oak tree farm. And in Florida and in the Carolinas, there's South Florida, you see the stuff that drips off the trees.
So
Yeah.
And they're just so beautiful.
That's
so
so
the place
cool.
is gorgeous. I renovated it to the nines, okay, and I did solar roof, and so it's actually off the grid if I needed it to be.
So
it's pretty cool in that
That is
regard.
cool.
Zombie apocalypse.
Yeah,
That's
if
so
anything like
cool.
that happens, we can go there. I've got solar, and it's on well and septic, so you're not relying on city services for that. But the house is beautiful, and I just totally went crazy with different vibe on it. And
you do it with Airbnb there?
It's
Now
Airbnb, and now Staycation, the TV show, reached out to me.
Oh, no way.
Cool.
And they said, hey, we want to film yours for the Florida property. I went,
Yeah,
what?
yeah. That's so
very
fun.
cool,
Yeah.
Wow, just adding stuff to your plate.
So we're filming in the next 3 weeks.
No way.
yeah.
You're going down there to film. That's so fun.
Yeah, yeah.
Oh, I love that.
And I'm going to feed him lots of tequila.
And
And
that's so cool. Wow.
awesome.
and yeah, now we're doing another one right now, and it's on a street called Congdon. And I went, ew, what a terrible name. Congdon. They're going to call it condom, right? That's
Yeah.
And I'm thinking, okay, this is bad. We got to do something about this house. So I called it King Congdon.
That's
And
so funny.
I'm making it a whole total jungle theme. So
Oh, that's so. I
Wait till
love
you
that
see
you
it.
have themes for your
That's
houses.
hilarious.
wait till you see it.
That's
I made
so
a huge
cool.
in the garage. I've got this huge games party room.
That's
We're
so
gonna have a
fun. Where is
huge-
it?
It's in Florida.
It's in Florida.
Fort Myers.
Fort Myers. Okay.
So they're all in there. So there's investment opportunities there too.
Yeah.
I do with people.
Yes.
Mm-hmm.
People like investing in
We're
Florida.
launching a fund down there called Juicy Capital.
Juicy Capital. Okay.
And it's going to be a
There's
REIT for these types of properties.
Yeah, it sounds like a type of weed, but it's
no.
maybe it'll make you some money.
Capital, Juicy Capital.
Juicy
hilarious.
Capital. All right, Carmen. Thanks
Well,
so
there's
much
a
for
lot
coming
going
on. We really appreciate it.
Yeah.
And guys, if you can like and subscribe to the channel, it definitely helps us grow. And then if you're looking to make a move in 2025, you can click the first link down below in the description. It'll take you to an absolutely free Zoom call with Brooke and myself. You can see if our services are right for you. And yeah, we'll link everything that Carmen has down below.
She's
Thanks
worth
so much for the
checking
support.
out.
Yeah. Thanks so much
All right.
for the
Thanks,
support.
everybody.
Take care, guys. Bye.